So are we on the brink of a major bull run? On one side, the market is waiting for Jerome Powell to lower the rate and boost the economy, but the Fed has held rates steady for 4 straight meetings because it fears inflation could rise again soon. Trump's tariffs came in 3 main waves. First, in February, the U.S. started collecting 10% on all Chinese goods. Then in March, the administration announced a second 10% on China and a 25% tariff on non-USMCA goods from Mexico and Canada. Finally, in April, a broad 10% tariff on nearly all imports came into effect. If it takes 2 to 3 months for goods to go through the supply chain, we should already be seeing some impact for the first 2 waves, especially since they impact the top 3 U.S. trade partners, but so far, core inflation is still trending down. This means that the tariffs' impact on inflation could be much less than expected. If Trump holds off on further tariff hikes and reduces trade uncertainty, that could give more confidence to the Fed to start cutting in a few months. The market isn't pricing a Fed pivot yet. On the flip side, the conflict between Israel and Iran is still unresolved. Some worry oil prices could skyrocket, causing more inflation than the tariffs themselves, but the market is pricing in a quick resolution, which means things could turn ugly if that proves wrong. The bottom line is that tariffs and the Middle East conflict are the 2 major sources of fear for the market, and they both negatively impact inflation. Once these 2 sources of uncertainty are removed, we could start to enter a new bull run.